Is there a possibility to have a recession during the presidential year itself? Well, if you ask me, it is possible. In fact, it is the year 3 that usually we don't see a recession, all right? But year 4, the year itself, there is a possibility. And I'll tell you more in detail shortly. And the next thing is this, will this Bitcoin ETF go through? To be honest with you, I feel that it will go through. As a matter of fact, itself, we saw volatility in Bitcoin recently. I think that as the price goes lower, it's time to buy. So tell you more, let's go. All right, before that, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, will Bitcoin go up again? Well, we have a crazy Bitcoin movement yesterday. Well, we have in fact, incredible. It was trading about 41,000 on the way going down, and then suddenly it burst up because there was speculation saying that the ETF will go through, right? Then after that, yesterday, we saw the selling coming in because then they say that may not happen. But if you ask me, based on my indicator, we have a buy signal from the boys, okay? So which means that, right, I feel that this is a pump and dump to basically get rid of people in the market. And then after that, we should see the upside. Now, the thing is this, I'm quite bullish with Bitcoin, and I believe that it will see the 50,000 mark pretty soon, all right? Maybe by latest April, we should see the 50,000 mark because I believe that Bitcoin will be a buy. And what's the reason for that? I'll tell you now in very simple logic here. Okay, so first of all, we saw Jamie Dimon from JPMorgan coming out and slash on crypto and say that if I was the government, I will close it down. But if you look at it itself, right, BlackRock names JPMorgan as an authorized participant for a sports Bitcoin ETF. What the, okay? So watch what they do, not what they say, because we've been seeing that Jamie Dimon has been going against Bitcoin cryptocurrency for longest of time, and we all know that it didn't really manifest. So Jamie Dimon is an American billionaire. He's a business executive, banker, who has been the chairman and the CEO of JPMorgan Chase since 2005. So if you ask me itself, right, this is the reason now, because now people are speculating that the Bitcoin ETF proposal will be rejected by SEC. Now, yes, SEC may likely drag a little bit more time, but to reject it firmly, I don't think so. You know why? My reason is simple. Look at the way Bitcoin has been going up. Take a look, guys. Bitcoin has been moving up very, very nicely. And you can see that a lot of boys have been buying. And every time they are buying, you can see the price shoot up really, really crazily. So if you ask me right now, right, this is another opportunity to buy Bitcoin again. Because we have seen this before, that when the dump comes in, after a while later, the market buys back. And what's my main reason on the technical side? Well, the biggest reason is this, guys, is this one here itself. JPMorgan, Goldman Sachs in talks with the Grayscale about Bitcoin ETF role. And this is at 4th of January, that's today, right? So the thing is this, they are now most likely to be involved as an authorized participant. So you tell me, how can these two big boys, especially Goldman Sachs, come into play and SEC don't allow that? This is ridiculous. I've never really seen that before. So my dollar bet is very clear. I believe that there will be a very high chance that this Bitcoin will be going up again. So to short Bitcoin, please be careful, right? Unless SEC really want to dump the market for a while, then again, buying up again. If not, itself, I think will happen. And at the same time, right now, the AAII members are feeling the stock market itself is going to be good. In fact, we saw 52% last week, and now it dropped to 46%. There's some profit taking a moment now, but still, it's way higher than the historical average. So what's a good reason now? Because everyone is involved in the market. Even this Maxillan Summation Index. Now, this index is a long-term version, okay, of the Maxillan Oscillator, which is a market breadth indicator based on stock advances and decline. So in short itself, right, a lot of stocks are now moving up. And because of that, right, usually we will see some profit taking soon. But the sentiment now is definitely very bullish. So with the Bitcoin going on right now, the stock market going on right now, it seems like it's perfect that the market will not come down, right? That's what everybody's saying. But if you look at the long-term thing itself, right, you can see that if it's 20% yearly gain, suggests more greens, but don't expect bigger than the next year, right? So what happened? In 2023, we saw a very big gain, right? So usually the next year itself, right, there will be some gains. In fact, most of the time, 80% are gain. Of course, there's some periodically, some selling on the next following year. But if you ask me itself, right, overall, is that if the market goes up by 20% last year, then the very low chance you get even higher this year. So that's the reason why we are telling our students to just go slow at the moment right now. Bitcoin is one, gold is one, we can buy this too. But then again, for stock market to buy right now, I think it's kind of dangerous. But again, the seasonal pattern shows that election year itself, the second half of it will do very well. Look at this. This is the seasonal pattern since 1950s, all right? But then to take note itself, there is a very, what they call interesting note here. Usually, you will have a bit of up rally in the first week of January, and then after that it goes sideways. But around mid-February, there will be selling, and the selling will bring it down all the way to about probably mid of March to early April. And then when that is done, this is where you can really go into buying. And seems to be this is the way that the market will behave. So if you ask me right now, I won't be buying anything. I think that we should just wait for a while, do some selling if you want to, wait for the market to come down. And when people telling you that is it, the market will sell, then that probably be the time to buy. Because the thing is this, right? The first 3 days of the new year, usually we will have the first day that will be positive, the second day negative, and the third day flat. So what we saw is exactly the same thing. Because on the first day of New Year, right, day after New Year, the market went up, right? And last night, we saw the Dow came down by 300 points. So today, most likely it's a flat day. So this is the seasonal pattern. And if it's actually moving this way, probably down, then likelihood this will actually happen. So guys, no need to chase the market. Wait for a while, then wait for probably the second quarter to buy. Now, this is a very interesting chart. I think a lot of people will be covering this. And I want to talk about this chart because I want to share this with you. Now, this chart basically tells you that, right, usually the market will peak at a certain period based on the pattern. So like this one, right, I tell you that the big peak will have been 999, which we saw that exactly for the NASDAQ. And then 2019, we saw that again. There was a high before the COVID hits, and then the next cycle high with 2035 and so forth. And in between, this is incredible because we all saw that in 2007, that was where the Dow hit the historical high back then. And then the market pulls back all the way down. And by about 2009 period itself, the market bottomed out and then the market's a rally and stuff like that. Okay, so let me bring to you an example like this, okay? Now, this is 2020, right? So if you look at the chart here, you can see that 2020 is where the market should be coming down. So you can see that the peak says that the market by 2016 will hit a high and then come down all the way to 2023, which is what we saw in a way, all right? And of course, you look back again in the financial crisis, in 2007, it was spot on and the market really sell down, you know, got my point, right? So by right, what we should see is that right now, 2023 is the bottom of the market. And then after that, the market will continue to rally until 2026. Wow, okay. Now, to me itself, right, I mean, we saw that Jerome Powell and friends came in to pump a lot of money into the market. Hence, as long as the money stays in the equation, it's very difficult to see the market coming down. So if you ask me, based on this chart, based on what you saw on the presidential chart itself, right, there is a possibility that the market will still be going up, but probably in the later part of the year. Because let's look at this. So I think that is a PowerPoint issue. Just give me a short moment. Apology on this. I just forgot to do an animation on this. Give me a moment. Okay, it's coming up. All right. So the thing is this. This is the 1929 until to date, all the recession starting in the year of the presidential cycle, right? So apparently, there's 9 times, okay, 9 times on the first year itself, right? The market goes into recession. And only 1 time in year 2, and incredibly in year 3, which is last year, there's no chance of recession. So if actually we know this is right, we will be selling the market too. But very important, the next one is year 4, which is this year. So it seems that, right, there is a chance of a recession this year. Now, of course, again, the statistics earlier show that it shouldn't be. But again, do we ever see a recession in the year of the president? Well, it does happen. Let's take a look here, guys. Remember the Obama recession? No, it happened. So Obama became a president, all right, later part, okay? And then after that, okay, the recession starts to kick in. You see that the market has been selling all the way. Then after that, it's all right. Even though he became the president, his inauguration is done, the market can sell. But of course, again, that was the Lehman Brothers time. So if you ask me, right, I think that what will happen is that the market will likely sell a little bit till March to April period. And then after that, right, when everybody tells you that its market is going to sell down, and if Jerome Powell and friends come in again and print, we may not see that recession. But again, based on the peak at the moment right now with so many U.S. economical issue here is right, it will really be a very important point by March, April, because if the market cannot recover by then we have an issue. Let's take a look what happened back in 2008, right? So the market was actually surging all the way to new high, okay? That was what happened. And then after that, out of nowhere itself, the market hit a peak, okay? And then the selling came in. And after that, itself, more and more selling came in because of Lehman Brothers, Bear Stearns, and stuff like that. Now, one thing to note is that every time when the market is selling down, the high of each cycle get lower and the bottom of cycle gets lower. So when you see this formation is happening, then you can know that the market is going to sell. But at the moment right now, we're not having this. So that's the reason why the market is still holding up. So, but if you look at the economic front, you can see right now, right, the import and goods and services is not doing that well. It went negative. So actually, this is a very classic way to inform everyone that we are actually in recession. But of course, again, you can see that the market is denying it for some reason. And even the consumer price index itself, right, who've been trying to pull it down, is now stalling at above 2.5. So which means that if you ask me, if the Federal Reserves really need to pump out the market and start to cut interest rates, this will again bring up the big issue of the CPI numbers. And when that happens, while the import and goods still stay down, then recession will kick in. And in fact, it's all right. The import of goods by custom base from China is now increasing. You can see that it's increasing. So which means that the US exporting is getting lower. And you can see the CPI data is now really stalling at the 2.5 to 3 level. And when this is all happened, you can see that the hours earnings is actually going down rapidly. All right, look at it, it's coming down rapidly while the continual claims are actually going up. So you can see before, whenever the continual claims goes up, right, then the hourly earnings goes down. It's recession, it's recession, it's recession, it's recession. So to me, it's a seasonal pattern calls for buy, but the economic front call for sell. And again, I'm going to say that, right, when this thing happened, it really boils down to the point whereby March, April period, if the market can really starve off the bear and then start to rally again, we should have a fantastic 2024. But if it doesn't, then the selling could really bring a recession into the market, because now the US debt as a share of GDP is at 4.5 times, my goodness, way higher than what happened in 1929. And we all know what happened in 1929. It was the Great Depression. And in fact, itself, the business debt to GDP is also at a high level. It's even higher than 0809. So again, all these are all the very important, alarm to tell people that you shouldn't be really chasing it right now. So guys, for all the bulls in the market, just wait for the market to pull back a little bit until maybe March, April period, then make a decision. If the market really firms there and recover, buy all you want. But if the market really can't, recover by then, the recession could hit the market, because now there's a lot of zombie companies that is really in the market, and we all know that zombie companies are basically companies that there's too much debts. They can only service the debt. They're depending on a low interest environment. They are relying on the bailout, and they cannot reduce principal debt. So basically, right, these companies are now increasing, and when that all happens, you need to be very careful. So probably that's the reason why Jason Hunter from JPMorgan, head of technical strategy, says that, right, the market S&P could drop to 3,005 by mid-2024. But you understand, the S&P now trading at 4,700. Even the presenter themselves was like shocked when he said that, and they were in a way laughing at it. So because there's a reason for that. Was Jason Hunter got it really wrong. In fact, 2 months ago, he got it really wrong. He says that the market will break down by 15%, all right, back then. And of course, we all know the market went new high. So of course, now he's saying 2005. Oh gosh, okay. But whatever it is, JP Morgan is always the type that whereby you really need to see what they do versus what they say. All right. So hope you like this video. Like and share and subscribe. Let me know if you have anything in the comment box. All right. This is Kelv signing off. Take care. Bye-bye.